So Phil's report, that's what counts for data in a period of stress like this. That's data that should find its way into thinking among central bankers and economists. Steve's survey, that's what's called data now. It's not perfect, it's not scientific, but it's the best you can do amid uncertainty. And both of those are inputs that tell me two things. One, the Chinese economy is slowing and almost assuredly had a negative first quarter. And it is deeply related to the rest of the global economy, and we should all take note. And second, the report that we got earlier in this segment, personal incomes are strong. That means the U.S. consumer is in better shape than they've been for a very long time, and that they're pulling back on their spending over the course of the last 3 or 4 months tells me they're being prudent and cautious. They have the money to spend, but they're not parting with it.
Kevin, let's go to the Wayback Machine in 2008, 2009. It reminds me of the thing that really bit the economy, that really spooked the market, which was transparency. We didn't know where the debt and the obligations were held. And the market just decided we're going to sell everything. Yeah. And I'll worry about whether or not Lehman and Goldman have a problem later. But right now I'm just going to sell Lehman and worry about that later. To what extent are we in a similar position in that a period of low rates has created a lot of leverage out there, leverage in the hedge funds? The banks we know are in better shape, but it was one of those things when the tide ran out, we realized who was not wearing a swimsuit.
I think that's accurate.
And I don't want to create a panic where it doesn't belong, but it's one of the pieces of data we may not have.
Down 12% alone, that is the tide going out, right?
That is the tide going out, and whether or not long-short equity funds, whether or not, I mean, Mohammed yesterday.
That's where you want the leverage, though. In a sense, I mean, if it's going to be somewhere, you've just seen them unwind. The funds that do that stuff, that say, "Oh, things are calm, rates are low, I'm going to lever up my positions in stocks," they're flat now. I mean, that's what 12% down in 6 days was.
That's what we
is them kind of backing away, as opposed to securitized debt that was basically pinned to household income.
That's not the lack of transparency we're worried about now. Lack of transparency is that we haven't tested anyone.
Right, that's the lack of transparency. It's medical.
It's got nothing to do with the leverage at this point. It's whether, is China coming clean? Do we really know over there, and do we really know what's going on?
I think that's a piece of the transparency. I think the other piece of the transparency
is about leverage at all.
Is knowing. Well, look, it was Mohammed El-Arian yesterday who, in a tweet, said that he heard that some banks were pulling out from their lending facilities to some hedge funds to be safe. That's the kind of thing where you find out what's really been going on
in China. That there's a million businesses that are going to go under if they don't get help.
So there's no question that U.S. banks have much more capital and much more liquidity than they did in the Wayback Machine of 2008. But we don't have a perfect understanding of the interconnections in the domestic banking sector. And if I'm half right, that the Chinese and Asian economies are suffering from this first, that the European economies will suffer from it next. If we look to some of those financial institutions and some of those connections, there's still a great veil that is difficult for us to assess. And what do markets do amid periods of between fear and greed? They run. This is where it's an opportunity for the official sector to try to pull back the curtain, because in all likelihood, the truth is better than markets fear.